Here we have the 2-hour price chart for NVIDIA Corporation, stock ticker NVDA. Here we can see that the stock is attempting to make a bit of a recovery here. Overall, this upside movement has been minimal at best, to say the least. So if we drill in a bit here, we can see that recent declines have fallen all the way to 116.56 would be the price lows currently. The gains here have been minimal, and overall, we can see that most of these candles here are definitely red and bearish. Bounces have been minimal. So, overall, we do have to kind of take a step back here to kind of reassess the situation and take a bit of a longer term viewpoint so that we can try to figure out where prices are likely to be headed next. Currently, we're running out of some support zones if we're looking at the most recent Fibonacci analysis. So in order to measure this recent price move, we're looking at the price lows from May 31st. These would have come in at 106.94, just below 107. And then this would extend to the prior highs, which came in during the June 20th trading session at 140.76. As we can see here, prices did fall through most of these Fibonacci levels quite quickly. We even lost the 618 relatively quickly, but there was a bit of a bounce here. If we kind of drill in here, we can kind of see what happened. Specifically, we did kind of lose this 618 retracement, which would be this light green line here. But prices were caught by the 200 period exponential moving average, which is the purple line here. So, these are coming in roughly into contact with one another. They're not exact. I usually like these to match up a bit better than this. But the 618 retracement came in at roughly 119.80. And then this, 100 period exponential moving average wasn't found until 117.50. But we did see a bit of a bounce here. So, you could technically say that we didn't see a true break here to the downside. But this current price move looks much more decisive. And we do see that we've broken through these prior lows, as well as the 618 retracement and the 100 period exponential moving average. So these are all negative signs currently. And a lot of this is being confirmed by the indicator reading itself. If we kind of drill in here, kind of move in more closely, we can see that prices are currently, attempting to hold up at this 200 period exponential moving average. In my view, these bounces are limited. I usually like to see a bit more of a bit more evidence here that we're going to see a true turnaround or a true reversal. And I'm really not seeing that in this chart. Mostly what I'm looking at here, is this price gap. And there is some scope here that we could try to fill this gap. But the main problem with that would be the fact that we've got these exponential moving averages that are relatively close by, and they're also declining at the same time. They're pointed in the downward direction, and then we do have some negative moving average crossovers, which could kind of pose some problems here. So specifically what I'm talking about is this yellow line here, which is the 20 period EMA. And we can see that it crossed over the 50 period EMA, which is the orange line. And we're currently in the process of crossing below the 100 period EMA. So, overall, these are bearish factors. These are all factors that would be expected to provide resistance here going forward. And this could make it more difficult to fill this price gap that was seen previously. This is something that really does need to happen in order for us to, get back on track and start to resume the prior uptrend. We're trying to move back into this gapping area, but there's just so much selling pressure that's seen in the market more broadly. It does look like investors are mostly kind of timid at this point. Especially stocks like NVIDIA have seen some major runs recently. The technology sector has been a clear outperformer for quite a while now, so it's not really a surprise to see some gains being given back. And at this point, it really does come down to market psychology a bit here. Are people are people feeling confident enough to get back into the market? I don't really like to talk about the word sentiment too much. I mean, I think people get caught up on that way too much. It doesn't really mean anything. It's not really something you can measure. What are you going to do? Take a poll and ask people how they're feeling today? I mean, it's kind of a ridiculous term that gets thrown around a lot. But I do think that when you see a major sell-off like this, um, I do think that you're probably going to find people that are much more reluctant to get back into the market and to take, kind of outsized positions and try to catch the bottom here. Um, I mean, personally, I can understand that myself. I mean, I would like to see some better evidence for a turnaround here, and we're not really seeing that just yet. So if we're looking at things, in a more objective way, I really don't like this word sentiment. I feel like that's, it's a very amateur thing to say. What's sentiment today? It really it doesn't mean anything. It's not something you can measure. So, what we can measure is actual price action. And here we can see that, if we're looking at this most recent price move, this kind of dominant bull wave here, we can see that, as I said before, most of these Fibonacci levels have been broken. The kind of final line in the sand here comes in at the 78.6% retracement, which comes in just above 114.10. So, if we do see that level tested, it would mean that we break through the 115 level. There you have another psychological type level that's being broken to the downside. Um, I overall I'm starting to view this as just a kind of a messy situation. And people are asking me whether or not you should start to take positions here. Should you start to scale in here? That personally, that's not how I trade. I mean, if you want to try to just catch a falling knife and try to get in, I mean, it's possible that you could get in at a discount here. But I tend not to trade that way. I like a bit more clarity in the chart itself, and I don't think that we're seeing that at the moment. The best thing that we can really point to is this moving average support zone. But to me, that's just not enough to enter into a trade. So currently, what we're seeing in the indicator reading, is mostly dominant bearish momentum here. You can see that this upward trend movement and in the relative strength index, which is this purple line down here, this upward trending move in momentum was broken to the downside. So this is no longer active. I just leave it on the chart just to show that it was there previously. And the only trend here that we do have that remains active would be this downtrend which has been in place roughly since the stock posted its all-time highs. So, the only positives that I can point to currently in this chart would be the fact that we're rolling out of oversold territory. That is a bit of a positive signal. Maybe we can get a moving average break here. Maybe this purple line can break above the yellow line, and then that would be a bit of a positive signal, and that would show that we're rolling out of negative territory here. And then in addition to that, you do have this 200 period exponential moving average. For me, this is not quite enough. I would need to see more. I would prefer to look at other stocks in the market right now, because to me, this chart is just too messy to start getting involved. And I do think that there are better opportunities elsewhere. So here's the current market analysis for NVIDIA Corporation, stock ticker NVDA.